Thank you for visiting IRS.com. Let's quickly break down tax credits, how they compare to tax deductions, and the difference between refundable and non-refundable tax credits. Let's begin with what a tax credit is not. It is not a tax deduction. When the tax deductions are applied, they reduce your taxable income along the way, which can definitely add up to tax savings. And in this example, we have gross income of $50,000, tax deductions of $13,850, which results in taxable income of $36,150, which that is the number that our tax rate will be applied to come up with a tax balance owed of $4,338. Now, a tax credit is applied of $3,000, which reduces the amount of tax owed on a dollar for dollar rate, resulting in a new tax owed balance due of $1,338. That is the difference between top line tax deductions and bottom line tax credits. Now, not all tax credits are created equal. There's actually two types. There's refundable tax credits and there's non-refundable tax credits. And the difference is pretty simple, straightforward. One's refundable, one's not. Refundable tax credits hold the most advantage because the credit a taxpayer qualifies for, if it supersedes the amount of tax liability that they owe, they're allowed to receive the difference from the IRS in the form of a refund. Whereas non-refundable tax credits, they're still great. They directly reduce your tax liability. But in the event the credit reduces the tax balance below $0, they just don't allow the taxpayer to collect that difference in the form of a refund. Let's take a peek at a refundable tax credit in action. Taxpayer John here owes $2,500, but after he qualifies and applies for a refundable tax credit of $3,000, he is actually going to be due a refund from the IRS for $500. That is a refundable tax credit. Common examples of those types of tax credits are the earned income tax credit, health coverage tax credit, the additional child tax credit, as well as a few others. Let's look at the same example where the credit is still worth $3,000, but it's non-refundable this time. So John owes $2,500. He has a $3,000 non-refundable tax credit he qualifies for, but the balance due to John at the end of the day will be $0, as the non-refundable tax credit cannot reduce the tax liability below zero, therefore resulting in no further refund. That is the difference between a non-refundable and a refundable tax credit. Examples of non-refundable tax credits off the top of my mind are the adoption tax credit, the child tax credit, and the foreign tax credit.